kind of our group's first guinea pig for creating these homework support videos. We're going to be going over Wiley Plus Chapter 3, exercise number 5 in the homework. If you're having trouble seeing my screen, you might try upping the resolution on the YouTube video. I found that after messing around with the tools that helped me be able to view everything clearly on the screen. So you might try that. So let's go ahead and get into it. So this is a 3-part assignment or exercise. They want us to complete or fill in a couple of financial statements, an income statement, a retained earnings statement, and a balance sheet, classified balance sheet. And they've given us here on the left, you'll see my internet browser, and we've got a what they call a tabular analysis of transactions. And these transactions were made during August 2017 by the Coal Lumber Company during, and this is important, its first month of operations. So this company is just barely started in operating. They've never had a month of operation before, so that will come in handy in the return earnings statement. But we're getting ahead of ourselves. We'll start with the income statement. This part is going to be pretty straightforward. We know that it's going to be for the month ended August 31st, 2017. And unfortunately here, they've really made it really straightforward for us. We know that an income statement is a company's revenues minus expenses to get either a net income or a net loss. And then the transaction side here on the left side of the screen, we have our assets, we have our liabilities, but we also have our stockholders' equity. And we know that's going to be our common stock plus retained earnings. And they've even broken that further, and we know that retained earnings are going to be revenues minus expenses. So all of our revenues are actually right down this column, and we see that the only revenue we had for this month is $10,600, and it was a service revenue. So filling out the income statement, we're going to have revenues, and we're going to have a service revenue for a total of $10,600. So then we can go ahead and go to expenses. Again, they conveniently put it all down this column here, and we're going to list these expenses by the greatest amount first and go down. Since these are all happening this month or this past month, we'll just do it by the greatest amount. So we have salaries and wages expense, and I apologize, this actually will go down in cell 7, A7, and we'll just put expenses, get the right title. And we can see that the salary expense here was $2,400. We also had a rent expense for $890, and we also had a utility expense. And utilities, I should say. Forgive me if my spelling is erroneous. When you go and actually do the homework, you can kind of find it in the scroll bar. So hopefully you won't have an issue with spelling. Let's see here. So that was $340, and that was convenient. I like how the transactions had it right there in the expense column, and then also when we have a transaction journal, the type of transaction is going to be here on the right hand side of the journal, right beside the stockholders' equity. So that was convenient. I went ahead and set up my Excel spreadsheet to go ahead and add all these expenses and revenues together. So we have our total expenses, and here in cell C10, I've set up an equation to add B7 through B9, and it's $3,630. And then we have net income for a total of $6,970. So we have our net income in our income statement. So that works out great. So going into part B, we have our return earnings statement. And this is going to be, again, for the month ended August 31st, 2017. And now here is kind of the, we really have to pay attention to the beginning instructions. So, because we know that we are going to have a returned earnings for August 1st. So this is our beginning amount. And if you look at the transaction journal here, you'll notice that there's no transaction for the beginning retained earnings. So if you've had trouble finding it, I think that's okay. The key here is going to be in back in the beginning instructions. We see that it's August 2017, and this is, as it says, these transactions happened during the first month of operations. So Coal Lumber Company has not had any previous operations, and so they're not going to have any previous retained earnings. So it's just going to be zero. So we'll leave that as zero and move on to our adding, or what we add to that, which is our net income, which is, if we remember from the income statement, it's going to be that $6,970. $6,970, and that will give us, will bring us to the subtraction. If we can remember the equation for retained earnings, it's going to be retained earnings, the beginning retained earnings plus net income minus or less dividends, and we'll find that under the retained earnings, we have our dividends, and they had $2,100 during the month of August. And that will give us our return earnings for August 31st. And I had that cell C9 equation set up again. So that gave us $4,870 for the retained earnings. Now, the last part C, is a classified balance sheet. And this is going to be a little bit tricky. We're going to have to do some, be diligent and figure out what we're doing, because we don't have very well specified amounts. We're going to have to do some addition and subtraction here. But I think we can handle it. So let's go ahead. Now, filling out the title for the balance sheet, it's important to note that the balance sheet, again, reflects a single moment in time or a single day. It's not for a period of time, like a month or a year, that we find with an income statement or retained earnings statement. So this is just going to be August 31st, 2017. And my Excel will just kind of write it like that, but that's just for that day. So this is a classified balance sheet. So we know that with a classified balance sheet, we're going to put our current assets first. And we list, with a classified balance sheet and the current assets, we list it by liquidity, by how easy it is to transfer that asset into cash. So our first one is going to be cash. And we'll see here on the transaction, on our Wiley Plus transaction journal, that we have assets here on the left, and we have cash transactions, this entire first column. And so it's conveniently laid out before us, but we are going to do some math. It turns out that when we add our $24,400, which came from issuing common stock, and we subtract $1,160 from that equation, which was used, looks here for an equipment purchase. for $4,960, and the rest of that was provided or financed through our liabilities or accounts payable. We're going to pay the rest of it in the future, but cash we spent $1,160 right there for this equipment. We're also going to subtract $700 for supplies that we bought. That's going to be less cash. Our assets will remain the same, but we'll have that less amount in cash. We're going to add $4,300 of service revenue. We're going to subtract $2,500, and that's just an accounts payable transaction. In fact, this is paying back some of that accounts payable right here. So it looks like at some point they bought this equipment again for $4,960. Accounts payable for $3,800. They said we're going to pay you back sometime in the later future, and this transaction looks like it documents some of that paying back, or maybe it was from a previous transaction, but it looks like it's at least part of it. So that $2,500 less cash. So we're going to continue to subtract that. This one was the rent expense of $2,000, or excuse me, it looks like the dividend. This is paying for the dividends that we had in the retained earnings. And then subtract $890 from the rent expense, add $370. It looks like for an accounts receivable that we were finally paid. And then subtract $2,400 for a salary expense for paying wages. So essentially, we just add and subtract all of these in the cash column, conveniently laid out for us. We can do that here. Subtract 700. We're going to add 4,300, but subtract 2,500 and our 2,100 worth of dividends, our $890. But I'm going to add $370 from the accounts receivable and subtract 2,400. We should get 19,320, and that's what I had previously figured out. So I'm glad I could do it correct twice in a row. Sometimes you get nervous, but okay. So we can put that down for cash. That's $19,320. So the next part for this, for our current assets, we know we had cash. So the next part in our assets is going to be accounts receivable. That's pretty liquid. We're going to be getting those funds pretty soon. In fact, we got part of those funds already, so we could go ahead and put accounts receivable. And we see here on the transaction journal, we received $6,300 or as a transaction for accounts receivable. But then later on, we got paid at least part of it. So we can subtract the $370 because we got it in cash. So we can go ahead and do that. And that actually turns out to be $5,930. The next liquid asset is going to be supplies. And we see here on the column under supplies, we had $700 worth of supplies. So that's our 700. And that's going to give us a total current assets of $25,950. Our next part is going to be equipment. We know that land and plants and equipment all kind of go under a more long-term asset if you're not planning to sell it within the year. So we can just put equipment here because we don't have any other assets to list. So we see here on the column that's going to be $4,960. Bingo. Okay, so that gives us total assets. And we have the equation set up, and then we're listed at $30,910. Now, Okay, so we have the assets part of the equation. We know that the accounting equation is assets equals liabilities plus stockholders' equity. So if we do it right, if we do put our liabilities and stockholders' equity right, we should find in cell D19 here our total of $30,910. So we'll see if we can do it right. We're going to label it here. Liabilities and stockholders equity. And we're going to list as a classified a balance sheet. So we're going to list our current liabilities first. And in this case, we only have one. And that's accounts payable. And we see here in the column here under accounts payable that we do have $3,800, but then some of that was paid in cash, $2,500, and then we have a little bit more for our utilities expense at $340. So we're going to add that 3,800, subtract 2,500, and add 340, get a total of $1,640. Then that's it for liabilities. Pretty straightforward. So the next part of the equation is stockholders' equity. And we know that that's going to be common stock. And that is also going to be retained earnings. And for the common stock, one-time payment, one-time issue so far of $24,400. And then the retained earnings, we had discovered in part B of this assignment or exercise that the returning earnings is going to be $4,870. So we can go ahead and insert that here in cell C17. And then we find that the total stockholders' equity is a total of $29,270. And then the total liabilities and stockholders equity is going to be $30,910. And we see that that is the same as the total assets. So we can feel fairly confident that we accomplished that right. And so there we go. We filled in the 3 transaction sheets. It's very important that you start with the income statement and then the retained earnings statement. And then that gives you the information that you need for the balance sheet. Well, thank you for watching. Hopefully this was helpful, and hopefully we can spark some good discussion in the discussion board. If you have any questions, this discussion board for this is a great place to ask those. Thank you very much, and good luck the rest of the semester.